Hello, traders. It's Wednesday, the 12th of June, 2019. It's 8:02 a.m. Chicago time. Hopefully, the sound is coming across nice and strong and clear. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a mixed bag, really, overall. The U.S. bonds are unchanged on the session. The Russell's down 1.6 points or 0.11. The product that is taking a bit of a punch to the chin is crude. Crude is down $1.25 or 2.35% as it's heading into its really big area down below at $50.50 per gallon per barrel, and so crude is walking away from what looked like a pretty decent and well-staged recovery, but couldn't break through the 54.80 above, and is likely to turn lower and continue lower to find buyers as part of the process of auctioning. The European markets also took a bit of a pullback. The Euro stocks are down 15 points or 0.44%. The DAX is down 52.5 points or 0.43%. The Nasdaq is off. The Nasdaq is currently trading right against yesterday's low, RTH low, and the S&P is off, also trading around its low area on what looks like a relatively small range overnight compared to prior sessions. So this is where we stand this morning. The leaders this morning: gold is up $5.50, 0.41%, trading at $13.36.70. The cable's up as well, and the 10-year note in the U.S. is up 3.5 ticks. Gold, apparently, there's just a ton of it being bought by the Chinese government, supposedly on a long-term basis, so potentially a hedge on these trade wars. So, we'd have to have someone who's more macro-oriented to talk about that, but that's just something that I'd read. So take it with a grain of salt. And so that's where we stand. As far as what we've got for the remainder of the session, you probably heard that core inflation came in better today than expected. U.S. year-on-year for May came in at 2% versus 2.1%. The market popped a little bit and has pulled back since. There wasn't too much of a reaction. We'll look at that on the order flow. So that's core inflation, and then the inflation rate year-on-year came in at 1.8% versus 1.9%, also better. Looking ahead at what could interrupt our trade today, the EIA crude oil inventories come out at 10:30 Eastern, expecting a draw of 481,000 barrels, and gasoline expecting a surplus of 743,000 barrels. Again, that's at 10:30. At 11, we get ECB's Kerr speaking. We get the monthly budget statement from the U.S. at 2 p.m. Eastern, expecting a deficit, and get this, $185.5 billion. So clearly something's not adding up here. The prior is $160 billion, but $185.5 billion is quite the deficit on the monthly budget. And so that's where we stand. There are some numbers out of Australia this evening, U.S. time at 9:30 Eastern. Unemployment rate. The unemployment numbers come out of Australia, and that finishes the day. Let's take a look at what we expected versus what we got in terms of yesterday's playbook or scenarios. Yesterday, the primary expectation is we're likely to push. We were opening right above the prior day's range in the 2906 area. The expectation is a push to 2914 or so, and then a rotation down and a tag of 28.94 before the market starts to stabilize. We talked yesterday about the fact that we finished Monday's low really, really poor, and then we ended up. So here's where we closed on Monday. Here's where we closed on Monday, right there at the low. And to me, as I said yesterday, that's traditionally or historically quite a bearish close on a neutral down day. The expectation overnight is that the market is likely to drift down into the 2879, 2880 area. That's what I wrote in the convergenttrading.com's community chat after the close, that the expectation is for this to drop into the overnight session. And what it did is it tested 2886. Dang it, I keep clicking on the wrong screen. 2886, which is really important in that it's Friday's high, it's the overnight low, and that session's low. So a triple test area: resistance Friday, support Monday, support into Tuesday's extended trading hours or overnight session. And the expectation is that's likely to break and push lower. And instead, we go all the way across the range and open above 2906. Very, very interesting set of circumstances yesterday. So the primary expectation is we're likely to explore to 2914, as you see it on the screen here, and then to start walking back to 2894. I could see the weak low there, but again, my goal is to survive today and to make some money rather than shoot for bigger targets. I look to maintain my my scenarios to statistical daily ranges, right? So at this point, I'm looking for 20 points on the range down, and that's plenty for this environment. And so I stop at the point of control 2894. Here's what actually happened. Market opens, pushes up. Remember, I was looking for 2914 area to be tested. It pushes to 2911.5, comes up short, comes down into the prior day's range. Here's a second chance to pull out of the prior day's range and start to squeeze anybody that came into this bigger rotation down, and that doesn't happen, and it starts to rotate below and hold the prior day's high. 2905.75, let's call it 2906 for simplicity, which is also our mid VWAP and so on. This creates the first opportunity to get short with a target of where 2894.75. If you recall, that's the point of control. That finishes the primary scenario. So again, the primary scenario is what it looked like, right? A test of 14, open above, test of 14, come down, retest, come back up to the prior day's high. Does that look familiar? And then we push down into 2894.50 or so. So this checks off. It came up close, but didn't quite get to 14. It's still in pretty much in the stock zone. It pushes back into the range, check. Tangles with the high, check. Touches the point of control as the primary target, check, and then bounces from here, no check. That did not happen. So here's the actual, right? So pushes towards 2914, check. So we have initiative buying, pulls back into the range, check, tangles with the prior high, check, pushes to the point of control. There you have it. And from here, the expectation is a little bit of chop in the prior point of control, and then start to shift up, no check, right? And then from there, it pushes down and it takes out this 28.86.25 area and manages to push into 28.80, which is what? That was Monday's target. The overnight target for Monday was this 28.80 area, and that was pretty much our low of day, 28.79.25. So it pushed by 3 ticks before the bounce back into the range, and we finished the day with a normal variation day down on a profile that clearly shows that there's no consensus and the market continues to position for value. Okay, so the overall shape of the profile yesterday is saying that the counter rotations were fairly poor and there was no consensus. If there's no consensus, what does the market do? Anybody? Well, can't wait for your answer because you're on a 15-second delay. If there's no consensus, then the market continues to discover prices. It continues the discovery process until it finds the opposing side. And I'll draw it over here. As if it finds the opposing side, we're likely to see an excess low, right? So the market pushes up and then finds the intermediate high and then comes to the middle and it starts to coil or balance. And then we end up with a profile that looks something like this. And now we have consensus and the market now is priced in and it's done with its discovery process until the next piece of news comes in. That's a quick crash course in the auction market process and in volume profiling right there. But this is what we have here in real life, and what we ended up with is a really weak low on the low of yesterday, with a point of control in the lower quartile of the range. If you don't understand quartile, it just means if we split this range into quarters, it's in the lower quarter of the range. This is, you could see that as the market was closing, we have a pretty decent coil at the point of control. So the expectation is what? The expectation is for a continuation lower, and that's what we got in the overnight session. Okay. Is that, am I speaking too fast? I know that's a lot to cover, but really interesting stuff. You're seeing things unfold live in front of you in terms of how auctions work and how I basically look at the market and trade, right? Coming into the overnight session as we continue our contextual read, first thing we check is the volume. The volume's pretty decent, pretty much in line with the prior session volume at 254,000 versus 247,000. So relatively okay session. The problem is yesterday's extended hours had a really decent discovery process going on. You could see that profile in the overnight session. Yesterday, or the day before yesterday, was really jagged and quite active in terms of price discovery. Yesterday's, again, has this odd notch in it like we saw before and is really resting near lows. The overall piece that I'm looking at in the overnight session is here's a test of mid, fail, mid, fail, mid, fail, mid to the tick, fail, mid again, attempt and fail, mid again, attempt and fail. Multiple failures at the mid yesterday, and it's just the selling pressure is continuously on these participants in the overnight session. And where do we end up on the low? We end up on last week's close. So we've pulled back to where we closed last week, a bullish engulfing week, and we're basically in equilibrium with a Friday. We're balanced with Friday. That's what the overnight session is telling me. It is looking kind of weak. The expectation is that unless there's a quick response in today's open, in other words, we open and we immediately push up, it is likely to continue lower to find those buyers. Okay, so that's where we are. Let's take a look at what our game plan is for today. These are the scenarios. Here we go. So what are we expecting for today? I had some trader wisdom for you today, but there's not going to be time for it. What are we looking for today? I'm looking for a quick response. If there's any response at all, I'm looking for 28.93 to close the door. Okay, this is just above the overnight high. It was tested a little bit in the overnight, but overall it's opening in range of the prior day. I'm looking for an open auction that is somewhat responsive, looking for a test 28.94 and then a failure to come back out of the range and then start to move towards the overnight point of control and to squeeze lower. This puts us in Friday's profile. So pay attention. This is Friday's the template day, and Friday's template doesn't show very much underneath this 28.74. If there is some more selling pressure, we are likely to very quickly start to make it all the way down into 28.63. And then after that, the big area becomes 28.53.75, which is a tiny little itty bitty gap zone. Okay, so this will become the extended target, and I'll put dashed lines in it. But overall, I'm expecting the market to test and bounce from up here. Okay, this is barring news. News changes the equation. So, do I want the market to do this? Am I expecting the market to do this? No. But if it does, then I know that if it does turn at 28.94, I'm aiming for the prior low at 28.79 and a quarter. And if it takes out 28.79 and a quarter, I hang on to my runner, right? That's the whole point of having these scenarios, not to set our mind, to fix our mind to a particular play or plan, and we want the market to do it. It's to tell us, look, if it clears this obstacle at 79 and a quarter from a test up, and this test, by the way, could turn at 28.86 and a quarter. We could respond back to 28.86 and a quarter, which is Friday's high, right? It could respond at 28.90, which is the closing area of the prior session, or 2 sessions ago. It could go to 28.94. I don't know. I'm relying on order flow, and I'm relying on the way the market is playing in order to engage. Once I engage, now it's about what the market wants to do. I'm not going to sit here and dictate that the market needs to go short now and look for evidence for a short to hang on. I've engaged with the market, I let go, and then I'm waiting to see that it falls out of the prior day's range. If it falls out of the prior day's range, then my target is going to be that 28.73. If it clears that, then my next obstacle is likely to be 28.6750, blah, 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 blah. Very methodical until it reaches the extended target of 28.53, and I expect that there's a low probability given range statistics, daily range statistics, and so on, that it's likely to clear that. If it does, great, but I will not be a part of that. That's where the runner comes off. This is, you want the secret sauce, this is the secret sauce. It just isn't packaged in a way with some flashy sales pitch, but this is how trading is done, okay? At least on a bigger level. The secondary is we fall right out of range. If we fall right out of range, I'm looking for a response in the 73 area to come back into range. And here's the key here. It comes back into range and it starts to tangle with this point of control. If it decides to break out of that tangle to the upside, then we are likely to squeeze back to 2,900, and that becomes the top. If it doesn't hold on, then it is likely to squeeze down, but it's likely to be slow. I'm not expecting a push as strong as we do with scenario 1. Okay, that's all I have for you. I know this was a long one, but I would recommend you listen to this again. I'm walking through the process because I know people kind of doubt everything they hear, but this is kind of, you're trading a story. We're watching things unfold. And it's really important to have a playbook for what you would do as the story unfolds. You're not imposing your bias or will on the market. You're simply creating a plan if, and it's a huge if, gigantic if, huge. If the market does what it does, it tells us, okay, here's what's in play. Okay, if my troops get flanked from the left, here's what I'm going to do with my tanks. Here's where my fighter jets are going to carpet bomb or whatever. This is what we're looking for. We can't predict what our opponent's going to do on a battlefield, but we know that if they move in a certain direction, here's what our plan is going to be, and we're coming in with that sort of a plan. I suggest you listen to this again. I suggest you link your friends into this who are struggling, and hopefully they can start seeing things in a bigger picture way. Good luck, and I'll catch you later. Take care.